Well, hey everybody, welcome back to Swing Trading. My name is Mike Fairborn. Hope you're having a good day in the markets. We got started off on the week a little bit with some volatility. I'll put it that way, with that DeepSeek announcement, and it did have a little bit of an impact in our portfolio on one of our stocks that we were looking at. So I want to take a look at that with you today. But folks, today specifically, though, I wanted to really dive into and talk about how a form of double divergence can really help kind of bring things together as we're looking at potential swing trades. And so I want to take a look at that today, tying it in with some trends as well. Good to have you here today. I'm just seeing everybody in the chat. I did put a quick note in the chat just to Ricebird there, just saying, hey, we might be seeing a possible shift into some of the dividend-paying stocks, which does happen sometimes when you get volatility within the major market that might impact technology. So I did want to do a dive into that as well, looking at some potential swing trades there, because there are times actually when dividend-paying stocks do look, from the appearance of them, they look like growth stocks. And so we're seeing maybe some of the signs there. So we'll tap into that just to see if we do get a move, we might be ready for something like that if it does unfold. But hello to each of you. We've got Riceberg, Harlot, we've got Alfred, Austin, David, Alfred, Rojo, Kenneth, Jill, Nirmal, Ocean Life, Jay Richardson, many others. Good to have you on board, folks. Any questions or comments you have, throw those in the chat. I'm joined in the chat by a good friend of mine, Cameron May, who has also noted that you could follow us both on X. My handle is simply Mike Fairborn CS, and Cameron's is Cameron May CS. So I encourage you to give us a follow there. Let's hit some disclosures so we can jump on into things here as we get started, though, folks. Information here is for general information purposes only. It should not be considered an individualized recommendation. Let's see. Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for educational purposes only. Investing does involve risk, including the loss of principal. Stop loss orders will not guarantee an execution at or near the activation price. Once activated, they do compete with incoming market orders. Now, with the stop limit order, we've hit that from time to time, but with that specifically, you risk missing the market altogether. In a fast-moving market, it may be impossible to execute an order at the stop limit price or better, so you might not have the protection you sought. Now, past performance is no guarantee of future results, and let's move on into things here. So we are back at it. This is a fairly new class. We've been around for a little bit over a month, I would say, but just wanted to do a quick review for those of you that are new, and great to have you all here. If you are new, let us know in the chat. Welcome to each of you, and we always love any questions, comments. In fact, I picked up on several of those comments coming through, topic requests and whatnot in this class and others. So great place to put a request in as well, or something you might be looking at. So we'll try to get to those. The bull flag is a pattern that might be positioned for a swing trade. Now, one thing that I've heard traders say is that all swing trades are short-term trades, but not all short-term trading is swing trading. Short-term swing trading specifically might capture really a 3 to 10 day time frame. And in many, many cases, we're just simply looking for the extension up to, I'll put days in here. It's not too hard to do. 3 to 10 days of a move. Sometimes that can go to 14. We've done that from time to time, but really what we're looking for here is a rally up from a flag pattern to the prior high. So right there, and we refer to this as a T1 level. That's target number 1. Target number 2, I've got to erase some things, but I'll just put that in here. So that would be T1 coming back to this line. I got to put a 1 in though. That really helps. T1 right there at the prior high. So really, just looking at this move coming up, and sometimes that move, depending upon the pullback of that flag, it can be strong. It doesn't have to be, but I mean, sometimes it can be. We look at sometimes moves that go down all the way down to maybe a 50% pullback. So you can kind of just sort that out and think through that it's only going to rally back up to that decline of the 50% of the rally. Could be a T1 target, right? Now, a T2 target is just going to be the extension of the entire flag pattern itself, folks. So coming over here, that is your initial move. So we'll just call that like an A, You might have a consolidation B. I'm using some of the Elliott wave lingo here, but forgive me for that. But the C might be equivalent, if we go C up here, might be equivalent to the A. So could A equal C is the question. That's the question. The length of the initial move up, and then the pullback and the extension move. That, again, though, as we've talked about this previously, that would be our T2. Now, that's the bigger move. And sometimes, as we've talked about in this class, we might do a little bit of money management around there. Say, for example, if we put 100 shares on the initial breakout, let's just go ahead and clear that up again. Let's say there's a breakout here. We're getting in somewhere above a breakout above this little sideways channel line, or I should say slightly downward sloping channel line. Let's say we put on 100 shares. Well, if we go to T1, a T1, keep writing that in, we might sell half the position. So that would be a, minus 50 shares. And obviously we're just looking at a unit size. So if it's 200, we might be selling 100 or whatever that number might be. We might sell something like half. And then we might try to sell the remaining half at this upper level here. Now, when this is done, sometimes what traders will do when they take half off at the T1 target, sometimes what they'll end up doing is they might just set their stop order. We talked about the stop orders, but they might set a stop at a break even. So where they got in at, they might go ahead and just say break even at that level. And what they're really doing is they're just allowing really kind of what they've gained thus far in the market to just kind of unfold, or at least stop out possibly near the break-even point or the original entry point. So I wanted to throw that out there as another just kind of an approach. I like to tap into a few of these, give you guys some ideas right from the get-go before we dive into this, what we're talking about when we're looking at swing trading. And I do like to throw in money management from time to time. It can be quite helpful, and you'll see that actually with one of our stocks here today as well. But getting into that, let's do this now. We'll jump back in to our discussion and look at the SPX for now. You can see the pullback in the market. That was a big dip. And I don't know about you guys, but when I was thinking about it, I said, that deep seek, which is the AI from the China end that was released. And it's really interesting because it's around, cost cutting. And it's like, hey, did the Americans put too much money into this? Does it really require that much? Can the Chinese basically create what we did, but like at a substantially smaller dollar amount, like under $6 million or something, relative to the 100 billion that they've already, I think, put into ChatGPT, for example? That was the question, and kind of like I drink your milkshake, so to speak. I take what you've got, and I do it for a lot cheaper since you've already paved the way. I can just you've already, so to speak, discovered something. I can tap into it. It's an interesting concept, and we'll see what happens. And does that change the dynamic for technology stocks? Okay, that's that gap right there. It's kind of a black swan event to a degree. It was really short term. We just don't, you say it's black swan, but that's the initial impact, but what's the impact, down the road? Does it go higher? Does it go lower? I know there's a lot of different, observations on that. We could say that's like maybe an initial shock, but yeah, we could certainly go possibly higher here. And a lot of times, when you get an event like that, it's what does the market tell us? Give the market a chance to tell us what it thinks, and then just kind of go from there. In other words, what would make, I would say, some interesting sense here is, can we close above the low or the pullback bar that we just had yesterday on that news? And guess what we did? We broke higher above it. You can do that too with on some of these companies, as you're looking at swing trades, because this was very familiar, or it was kind of a familiar setup. And so we want to tap in to some of the swing trade concepts. Now, NVIDIA was an interesting one. It had a massive pullback, obviously, on that news. And you can see the extent of that gap. I think it was down 20%, which could fall within a swing trade timeframe. If somebody was like, this doesn't look like a really good swing trade to me from what we've looked at, right? Because we did make a new low here. And, it was a really deep kind of pullback. It's not really like a flag pattern when you go that low, and you might be breaking some lows. We're generally looking at a 50% pullback. But I was asked a question yesterday, and I've been asked this question in the past. When do you get in back into something like this? Well, it's always a question, but one thing that some traders will do is they might take this bar right here, the pullback bar, the big move down, and they might use that as a measurement bar. And this is what they would say. They would say, I'm not going to go long this position until I get above the high of that low bar breakdown. In fact, let's zoom into it right now. So there's our low bar, and there was a lot of volume on this bar, and so there was a lot of trading activity, and you'll notice it came right back up to maybe a resistance level or very, very close to it over here. So one thing traders could do is they could just say, hey, if you don't, maybe it gets bullish or the possibility of a shorter term trend, if, and that's if, we can get above this level and hold that point. Okay, hold up above that level, because what that's doing is it's saying at least we had the strength to break back up above resistance on the day that news event came out, and that news event came with tons of volume associated with it, right? I mean, tons. So does that make sense, you guys? Everybody on the same page with me on there? Let's just do this real fast. I didn't even think about doing this until now, but I wanted to just show you guys. I mean, I've looked at this, but look at the volume profile. If we take a look at this, a concept we discussed a couple of weeks ago when we were looking at maybe potential indicators, volume indicators that could lead price action. We come over here and we take a look at it. I'm going to do this over a shorter term time frame. Let's say, for example, 6 months. And I want to show you that we didn't have any volume here at all. But in that one day, we've actually got quite a bit of volume that came in right near that level. And so actually, getting above that level would be getting above resistance in the form of just a lot of volume over here. There's a lot of volume, right? And so in this sense, it kind of backs up the idea that you want to get above the high of that massive down volume day. In fact, I don't even have volume on here. I don't want to have too many things. So we're looking at a couple of different indicators today, but let's just show you real quick. Huge volume. I'm probably the biggest volume over the past year or maybe even 2 years came in right there at that bar. So getting above there is just a way you can look at this with any trade. So we did kind of a deeper dive on that, but hey, it was an opportunity to do so because you don't get too many of these. It's kind of like a black swan event. We'll see how it does unfold. Maybe it's more black swan for some of the semiconductors, but I just wanted to state that that's one thing that traders can and often do use is that high. Getting above there. Okay. Now, we've got more to talk about than that. In fact, we've got to talk about our own stuff here in this class. In fact, we did last week. We looked at, there were 3 companies we had in our portfolio, and this was one of them. This was Snow. Now, Snowflake itself, we'll go full screen here, but Snowflake, we were looking at, the price of the stock. Once we got in, did the stock, and we did get in over here, does it trade below the low of the prior day? Because our target on this stock, and you can see we came right up to T1 right here, was that T1 level, right? There's T1. We were going to come up to that level, but based upon what we discussed actually last week with potential exits, was getting out right at that level there. Kind of hard to see. I'll zoom in and get on it again, but you can see maybe from a distance we did trade below the low of the prior day. We wanted to use this as an example just in case there was some weakness. Now my guess is without that black swan event. Now who knows, but I would just say this, just my guess. Without that black swan event, we probably just would have maybe continued on up here and hit our T1 level. But we have to account for those black swan events, and the good news is we were able to get stopped or exit beforehand, okay? Because the exit was, again, trading below the low of the prior day, and that was the first time we got it. We noticed with this stock that a lot of times, and with this stock in particular, when it starts to trend higher, it's just real steady. It really doesn't trade below the low of the prior day, so we got out there. Now we got in, and I made a note of this. It was approximately like 16, here we go. It was about 16, for sorry, 166.14 is where we got in at, and we got out right there, which was approximately about 170. I'll just say 173.50. Okay, so that was the range we got on the stock with 100 shares. So 173, just as an example, 50 minus 166.4. So about 7 points off this move. Now it's a high price stock, and it did that on a really kind of slow upward move, but that was an exit that we had earlier. Now this is the one that we got knocked out on, and it was a fairly big knockout actually. We only had 50 shares within this Amazon trade, though, as I looked at it. We broke up above our level, and we were still holding firm. And then, um, you know, there was that T1 level that we could have taken the whole thing off. And what I did is I just took off 50 of the shares at that level, as we discussed. And so we had a 50 level, a 50, I should say, a 50 share position. So when it dipped, it was about a 4-point decline here. I'll point that out to you right now. It was almost right at a 4-point dip. In fact, let's do this right now. We'll go up here. And, from the prior day's close to this, you could see, actually from where we got in at, though. Yeah, from where we got in at, approximately right over here, it was about $4, a little bit more than 4, but right at the open, because this opened lower. And that was the extent of actually that DeepSeek announcement right there. Now, it did go back up, and you can see some strength in there. Now, one thing that I didn't do that, some traders can do is when it does, like we said, it trades back up above the high of the bar that tested low. Well, it did that today, and that could be a possible re-entry here. Keep in mind that there is earnings here too. But if it was a re-entry, we would be looking for a T2 target because we already had our T1. So our T2, if I pull down my y-axis, kind of like as we'd shown before, if this is the A, this is the B, and that is the C, which is equivalent to A over here in price, there could still be a target over here around, possibly. The target could be there, but is there the possibility of a move running up to the next target level? We achieved T1, but T2 is in question. Number 2 up top. Okay. Anyways, that ended with a gap down there, is how that unfolded for those remaining shares. Now, GEHC was our last one that we did, and that one today just pulled back and broke below this low. Now, it did that ahead of our T1 target, T2 target being met. The T1 target was met right there. This trade was put on very, very close to T1. Okay. But the T2 would have been more closely, connected to, let's see, this initial move here, like we've been calling A and C over here. And like we said, this kind of put us back to this range, but we did have a little bit of a pullback that did dip us below the low of the prior day. And that's just an exit that I wanted us to get used to. Now, there are other exits we've talked about, especially after prices get moving. As you recall, we talked about this last week, and we said that, hey, once you get maybe above T1 and going to the possibility of a T2 target, what we could do is we could throw on like a, let's go to a moving average, and there it is right there. Let's just put the show study on. There is our 10-period moving average. I'm going to just thicken that a little bit there for us. And then we could use this instead as another type of exit. It remains to be seen. I went with the shorter term one, and I kind of just did that because of the fact of that announcement, and just it was a little bit shaky in the market. We didn't know what to expect, but yesterday was actually a pretty interesting day. We still ended up going higher, which set a better exit point for us today because it did make a higher low than the prior day. But just again, if we're going from T1 and we've achieved the T1 has been met, and now we're on our approach to T2, we can shift to a moving average, giving a little bit more flexibility on when to exit out of that position. Okay. So let me know if you have any questions on that. I'm going to zoom on down and just see what we've got. But that's where we're kind of at right now on these trades. It was a little hairy yesterday, but this one held up. Interestingly enough, though, it did get knocked out today right there. Okay, so that's what we've got right now. What I wanted to do, yeah, exactly, Scott. So if we go back here and look at snow, you could do something similar to that as well. If we did get above today's high, it's really just kind of monitoring it though. We did get above, I should say yesterday's high, we got above that, and we're right at resistance literally right now. So, yeah, I mean, look at the T2 target here. If we were looking at this, a move possibly up here to up here, and we could look at adding this back in again today because we have recovered above that high. So that's something we could actually look at. What I'm going to do on this, let's wait for one more day and see what we get in terms of a follow through. That's a 2-day move up top, but that's something to consider. Okay. Well, I wanted to mention to you this, and I pulled up over here, getting into kind of the core of our discussion today. That was our existing portfolio as we saw that, but there could be still some opportunities. We saw an Amazon breaking above highs as well as snow. It's short term. Remember the swing trade, 3 to 10 days. We were actually kind of in that range already, getting close to it for sure on that. But yeah, there's a way to trade. Like I said, T2 possibly up. Just need to be watching how the stock reacts around resistance. So that's an interesting point. Same though, as we mentioned with Amazon right here, just getting above it. Can we close above this range? Yeah. And remember, earnings is right there as well. All right. So I mean, many of these stocks can remain interesting and still for the possibility of that extended move higher. Again, we can see this real quick over here. Let's just recap it. Let's say if we're looking at Amazon, we're looking at a low over here. Here's the run up. Your initial target 1 met, and much closer to target 2 over here. I believe we got extremely close to that range right there. In fact, I think it probably came somewhere in there for the T2 target. But that's what we're looking at over here, right? For this move, can we have this follow through much, much higher? That's the question. Okay. So it does get deep and there's a lot of different things we can look at, but are there additional confirmations? Yeah. Yeah, there's some things we could look at there. Well, we need to look at some new stocks today, though, as we did reach some of the T1. We've reached all the T1 targets on those 3. But let's look at some of what we're seeing with the income type stocks. And a good way to do that is just to come over here and look right at our watch list over here. And you guys, this is so nice. I think many of you already know this, but if not, you can click on the watch list itself or create a new watch list down below, right? Click on the watch list down here. And then from that, select a watch list. Now, this is a public watch list. This is a 25-year dividend. That's also known as a Dividend Aristocrat. You can come down here and you can look at under the public folder. It's right at the top, 25-year dividend dividends. So they've raised dividends each and every year for 25 consecutive years. These guys are the dividend kings. They've raised them for 50 consecutive years. Now, from time to time, these companies will look like growth stocks. One of the things that caught my attention was like some of the big dividend players like AT&T, they're starting to move a little bit after an extended kind of a pullback over here. And you're going to see that with a number of these companies. In fact, let's look at a few others here. These are very recognizable names. Here's one, GWW. They all kind of show this pullback that these sometimes income and value stocks have really dipped quite a bit, but more recently they're starting to sort of round over here and break some of the prior highs, and they're just kind of in this very interesting scenario for the possibility of a break higher, maybe a rotation that could occur. This company actually has earnings, so we have to be mindful of that. But here are a couple that I wanted to show you a lot in line that are dividend aristocrats that might be similar. These are all going to be in this group, but that also have bull flag kind of possibilities here. Here is a 6-month chart. And like I mentioned, you guys, this has been a much deeper pullback. But what's interesting is the long term or the intermediate term or long term. That's really quite long term. Look at that trend. It's really been quite strong. And with some of these income stocks, it's not unusual one bit at all to see an extended move up and a longer pullback. Extended move up and a longer pullback. Will we get an extended move up again? That's the question. It's 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 been happening, interestingly, between a year and 6 months. You're just going to see that rotation over and over. This is like that's a 6 month kind of a bottom there. You could say from this point to this point, and it did take a while, but some of these might be in a position to actually get going. Plus, they do have with them dividends. Now, I just need to bring up, since I mentioned dividends, the dividends can be, they're not guaranteed. They can be cut at any time. The companies we're looking at here have had a history of raising those dividends. So it's just kind of a side note there as I plug that in. But here is the 1 year chart. And you can really see the extent of that pullback. We broke above that 10-period moving average as an indication of that downward sloping trend. And a lot of times, to get trading above the 10-period moving average, look at that. You're going to break that trend line that we've talked about. Boom, we rallied higher, and now we're pulling back into a bit of a range. I mean, we've held here for the last 1, 2, 3, 4 days right at that moving average. Now, I bring that moving average up because I've found that from time to time, when a trend is moving up like this, you tell me if you guys have seen this before, but if a trend is going like this and it comes back down, when does it oftentimes get moving? Not every, nothing's 100%, but around sometimes a moving average. In this case, maybe a shorter term moving average. It's been the case. I'm just drawing in the 10 here, but look at how many times you kind of bounce off that level, and it can hold true to the downside too. And that's sometimes where prices, boom, they really kick in gear, and that trend starts to begin to unfold in the direction that's above the moving average. We may be getting that right now. Notice how we're just sitting there right now? We're just right at that level, holding there for the possibility of a bounce. Now, we haven't got it yet. What's weird is yesterday, we actually got a close above the high of the low day. We got a K hold, but we didn't quite get like a 2-day confirmation or a break above that next high. We just kind of tested that level. So that is an interesting one. It's right there as we're looking at it. And okay, so with that, I wanted to mention this. A lot of times, if you might get the early trend moving, you're going to be looking at the possibility of a divergence on the indicators to really get prices, to really get an indication that there's strength building behind the scenes, which is what a divergence can do at a given indicator. I've got a couple in here that I do use pretty frequently. We've got RSI. These are both kind of momentum-based sort of indicators. But when we're looking at divergence, this is what I wanted to review with you today as we tie this in, because this can be quite helpful, and it can help to be a leading type indicator to show us is there strength behind the actual trend. And that's what we're kind of seeing a little bit here. Look over here with me as I point this out. Here was the prior high right there on the stock. Now, if we come down here, that accounted for really this high level on the RSI. And let me do this. I got to adjust the MACD because I'm going to do them all at once here. Here is our MACD, and I'm going to put my MACD line as just the mainline MACD. Got a couple indicators in here. We're just looking at one line, and I'm looking at divergence potentially off of that line. Okay, so I'll explain what this means here in just a second, but that's the high, the equivalent high of the prior high move. In fact, we drew our trend line right off that level at that point. Now, notice we began to break above the indicator point right there. Some strength. Notice we took out the high here on the RSI high. Folks, we took it out at the bottom right after we broke our trend line. We come down here. What do we do? Where do we take it out at? About right there. A little bit later, but very, very close, I should say, about right there. We didn't actually come back up to the top yet. This is showing, based on a couple of momentum type indicators, the possibility of strength that's building up behind the stock. Okay. We have that downward sloping trend line breaking. We broke above the 10-period moving average. Could this be a resumption of that longer term uptrend? Well, one thing that traders will look for is that divergence of indicators. And this is dual divergence. We're looking at two totally different indicators. We're looking at different sorts of indications. There's totally different math behind these two, right? RSI is measuring the closing prices over the prior 14 days on a percentage basis, comparing it over those prior 14 days. Is it closing stronger? Up in this case. The MACD is kind of a signal amplifier of price action. So is the MACD signaling additional strength within the move using a totally different mathematical equation? Yes, it is. It actually is considering that. And so we're getting the flag pattern, but there still was some concern because we don't yet have like a higher high yet over this time frame. We did take out this, I should say higher low. We took out this high right here where that trend line was, this high. Sorry, it was kind of hard to see, but right there. And we're kind of resting on it, aren't we? Right there. But have we made a higher low yet? Well, this could be a higher low, but it's got to get going. So we're past earnings. It's, if we can start to trade above this high right here, which I'm going to put my alert on right there. Here's my alert. I'm going to say breakout, question mark, above that high. Well, that's just giving us an early warning, an early indication that, maybe prices are ready to start moving a little bit. Now, this doesn't happen all the time, but another sort of aspect of dividend stocks is that sometimes traders or individuals who think that it might be a good investment, it might be cheaper at this level, if the prices are lower, they might try to get in. Some do get ahead of a dividend. Now, there are risks, obviously. You never just want to get ahead of, to try to get a dividend, obviously, because the stock price can adjust to that dividend. In fact, it frequently does. But still, income investors, they like their dividends. And sometimes this can be, when you're looking at dividend paying stocks specifically, it can be an additional kind of sweetener to the deal for income-minded investors. Sometimes they do. They want to capture that dividend. So I'm going to put that there and throw this out to you. We did get past earnings as well, and the result was, the market, we gapped higher, and then we kind of held that same range. So I've got that in there, but I want to get a little bit more additional confirmation. And then we can look not for a T1 retracement up here. We're really looking for that T2, a termination at T2 somewhere over here. Okay. With this, these are a little bit slow and, kind of maneuvering. Like over here, you can see that we bounced off of the moving average. When you're getting stocks that have the lower beta, sometimes it's better to have like a moving average because they do kind of meander sideways up a little bit. They're really quite slow relative to growth stocks. I do have a growth stock I want to look at today, one I know you've heard of. I think the vast majority of you have for sure, but they kind of go slow. And with that, we're going to stick with either or. If I get the entry, okay, we can put it in, but it's going to be an either or. Prices they've got to be holding above the moving average. That could be a potential exit point. That's the 10-period moving average, or just simply a 1 ATR. And I'll show you that. So this is just the average true range, ATR. Boom, boom. Let's click on it. There you go. We'll set it up over here. There is our ATR. We just take a 1 ATR. Of course, that ATR, that is the range that it trades between the high and the low on average over the past 14 bars. But you have to adjust or look at a potential exit day to day to day to day, each and every day. Or you can use a moving average. I created actually this interesting script in ThinkScript, which is like this. It's a trailing stop line, like it's like a trailing stop line. That might be a fun one we can incorporate in this class, but it just holds like a trailing stop. In other words, it just puts like for every high you make, it puts like a certain range below it. Things like that. Okay, so keep that in mind. We might do that. I mean, that could be fun. We could put that in there. I thought it was really interesting. It's a totally different sort of a possible exit scenario, but it's just a trail stop line that you use for a possible exit is what it is. All right. So let's do this. I'm going to go over here and let's go to our next one because we got more than one. Look at KR over here. What do you see on KR? KR is a dividend aristocrat, and KR has just broken above this high right there, just barely. See the trend line break? There's a break above, and you're following through a little bit today on this bar. Will that continue? That remains to be seen. Let me just get my ATR out of there for a second. I'll just kill it for a second. There we go. And notice over here, divergence. You're getting double divergence on a lot of these dividend paying stocks. Take a look at them. This high right there, we broke above that high and we're way high above there. Do you see the break? Not so much here on a short-term basis, although I saw it on a longer term. Look at this longer term chart. Here's our daily chart over here off these lows. You can see that we're just rounding up over here on that MACD. So KR is one that's just barely starting to move over here. And we'll see if it does move. I mean, we'll see if it continues, but it's been sideways for a little bit. It's kind of you can see the extent of how steady this can be too, but it's just it's really a meandering trend, right? This one. Again, a dividend aristocrat, low beta type stock, but we just took out these highs here. Let's go to another one. T-Mobile. T-Mobile. I showed you guys early on what was going on with AT&T. Now here is T-Mobile. You can see we did just start to trade above our 10-day moving average. If I were drawing a trend line down, we've broken above that, and we're kind of just stuck in this range. The only difference here with T-Mobile is you do have earnings right here, and it might just be more worthwhile to wait for something like that, and then to see how that does unfold going forward. In fact, if I back out of this, watch this. We'll back out here. We'll go back, back, back. You can see the extent of that long upward trend. But some of these long upward trends, after they've run up for a while, they can go sideways for a bit. They can go down for a while. The question is are some of these beginning to start to move right now? This is not a dividend aristocrat, but it is a kind of a dividend paying stock nonetheless. Okay. The last one I wanted to look at here, well, let's do a couple more. Coca-Cola's in there. You can see it really breaking above some range over here. In fact, this is so clear. This is the clearest divergence of them all as we look at this. Price is going lower here. Look over here on both the RSI and the MACD 2 line. You see that extended move up? I'll just draw like kind of a diagonal line going up. You can see it. It's actually trending higher, and we're moving on up. Folks, this is a positive on both fronts for something like Coca-Cola. Now, there isn't earnings over here, and we've kind of talked about just waiting to get past earnings on a lot of these, but it could be forming what could be a longer-term bottom here to keep an eye on. And you can already see the beginnings of higher highs and higher lows right through there. Higher highs and higher lows, just barely, but that divergence is massive. Again, this is a dividend paying stock, and this, with the exception of T-Mobile, which is not in here, but the other three are Fastenal, Kroger, you've got Coca-Cola's in here. That's actually a dividend king. So they've been raising dividends for at least 10 years, I should say, Coca-Cola. So keep a watch on that as well for the possibility, but you can see that shift with that divergence. And then last but not least, CL. Very, very similar here. Some strength coming off those lows. In fact, this high over here on the RSI relative to price is almost up to this high. Can you guys see that? Another way to measure it is just looking at the highs. So look at this. You're touching the high here, RSI, but prices are still way down here. Possible divergence. Over here too. That made a new low for the MACD. Clearly a higher low in here. Yeah, could be time for some of these to start shifting. So as you can see over here, this is actually bouncing off long-term, very, very long-term support. This is a weekly chart. This is 5-year weekly, and we made it all the way down to this level. So sometimes these swing trades can start actually after a long kind of a pullback and a breakdown as well. Now, what I'm just showing you is highlighting some of these because they haven't officially like broken this downward trend yet. But I guess if we're drawing it off of this level, we did take this out just now. The longer term, ooh, just barely. We're just like right at it. So it's just the possibility of a shift right now in that trend. Okay, so with all these in mind, I'm going to go back to KR real quick, and I'm going to look at this one. I'm going to put on here a 50 share trade at this point in time. I'm going to set this trade up though with a 1 ATR. So we'll look at a 1 ATR possible pullback for an exit point. We did just get above this high. I realize it's come back down as a shooting star, but we did get a trend line break. It's showing some of the indications of the possibility of a swing trade. Let's get into this if in fact, well, I'm going to put one on now. Normally what we could be looking for is kind of a break moving above the 50% range of this pullback bar to really get us in. I want to get something under our belt here. I mentioned to you, I want to look at Apple as well. But generally, the next move up here to kind of confirm, because it is a shooting star, would be a break above that level. So like 50% above here might give us more indications of an upward move. But I'm going to go ahead and just so I can get one under our belt here within these dividend paying stocks, let's go ahead and put this one on for now at a 50 share on a 50 share position. Okay, here we go. Okay, there we go. So that went through. Now, I did want to throw in here today because we're still seeing growth moving in. Here's Apple. And this kind of fits one of the more sort of the classical move that we were talking about in terms of, let's get this shifted over here. There we go. Yeah. Prices coming down. See that trend line break right there off the bottom. We're just getting started here. The only problem is we don't really have a bull flag pattern just yet. And we have earnings. So it's really been kind of tricky to find a lot that's going out there in terms of growth stocks. But this one might be having the possibility to set up in terms of the initial signs of the pull of that flag, right? So there's the pull itself and the possibility of a flag over here. We have to kind of wait and see what happens at this point in time. But this is a little bit early, but it's just kind of breaking up above that level right now. So this is one that it was showing up on some of the screens that we've talked about previously in this class, and some of them that I do look at on my Friday class for ThinkScript. But you can see that right there. There is that break. So Apple could get going again. That's a fairly big pullback, and you can see there's decent support right there. One of the things is if you back out, there's a longer term kind of a flag pattern maybe right there. I don't know if that would be it, but I don't think we've quite hit our level. There might be another leg in here. Remains to be seen. But yeah, more than anything, folks, I think that was our growth stock. But going back into what we looked at earlier, keep a watch on these. We will have a trade potentially set up here for the Fastenal if it does break above here. Just starting to get some of these that are getting higher highs, possibly higher lows in that income group. So again, you can tap into these right over here. Keep a watch on these. You're getting some early leaders out of the group like AT&T, as I mentioned. But watch these fairly closely. If you want, you can put them into a watch list or whatever the case might be and throw in, let's say for that example, that bullish swing that we looked at previously. And by the way, I'll put this link down below too. In fact, I'll just share that right now. This is an interesting one too, because that's our bullish trade, the bull flag, but it's also trending up as well. So we've got the bull flag with an extended trend to the upside. If you don't have that, I think many of you do, but that is what I wanted to finish off with, but for the aristocrats right here. So much smaller. It should load up quicker here. I'll share that in the group, and this will be under the more section down below as well. All right, everybody. Well, good being with you. And by the way, folks, if you found this presentation helpful, smash that like button below. Just helps get this content out more frequently, and definitely consider subscribing to the presentation, to our group, I should say, at Trader Talks, down in the bottom right-hand corner by just hitting that subscribe button. So easy to do. All right, everybody. Well, hey, thanks, Cam, for your help. Appreciate the comments. I'll be taking a look at those very shortly. Folks, have a great rest of the day. We'll see you.